good morning. Happy Monday. Welcome to today's episode of Morning Well. Start of a new week and a new month. Have a good one. Three things that we will talk about. 35 basis points, largest 1 month increase in yield since November 2016. Earnings from Salesforce and the week ahead. Rising bond yields blunted US stock market momentum last week despite signs of an improving American economy. On Friday, the Dow Jones was down 1.5% and dropping 1.8% for the week. The S&P was down 0.5% and down 2.45% for the week. The Nasdaq was actually higher by 0.6% on Friday, but for the week, it was lower by 4.9%. Tech leaders like Apple, Amazon, Facebook, and Tesla all fell over the last 5 days. For the week, Apple lost about 6.6%, Amazon fell about 4.8%. Facebook slipped 1.5%, while Tesla dropped about 14%. Government spending and Federal Reserve's aggressive monetary policy have supported the stock market during a tough year, but those two sources of stimulus are now fueling inflation bets and sparking a bond sell-off. When bond yields are at their lows, they offer investors virtually no returns or even negative returns after inflation. The lack of returns on bonds drove investors to stocks, pushing valuations to their highest point in years. Now that bond yields are rising, those richly valued stocks also look less attractive. Yields on the treasuries, considered among the safest assets to own, have been rising in the recent days as money managers bet on rapid economic rebound. The yield on the 10-year treasury ticked down on Friday to about 1.45%. That is from a high of about 1.51 that we saw on Thursday, its highest closing level in a year. For the month of February, the 10-year yields rose about 35 basis points. That's the largest 1 month increase in yields since November 2016. Fresh federal data released on Friday showed that the US consumer spending increased 2.5% in Jan after household incomes jumped 10%, mainly on the latest round of stimulus checks. President Biden's $1.9 trillion pandemic aid narrowly passed the House in early hours of Saturday. Now all attention would now move to the Senate, where the vote will happen. Earnings from Salesforce. Salesforce.com reported sales increase of about 20% in the fiscal fourth quarter, the same year-on-year gains as in the previous period, disappointing investors who were looking for growth to accelerate. In fact, shares were down about 6% overall on Friday. Still, the company gave a revenue forecast for the current period that exceeded analyst estimates, suggesting customers have begun spending more on its software. Salesforce is in the process of buying Slack Technologies, the latest acquisition designed to fuel continued sales growth, which the company aims to top at 25% a year. Chief Executive Mark Benioff has orchestrated more than 60 acquisitions in 22 years, taking his company from dot-com era upstart to a titan of cloud computing. Sales were up about $5.82 billion in the period ended Jan 31st. Profit excluding some items was at $1.04 a share. That compared with analyst projections of about $5.68 billion in terms of sales and 75 cents in terms of profit. This is according to data compiled by Bloomberg. In terms of the week ahead, a slew of Fed speak heralds another hectic week. Jerome Powell is the main act on Thursday, but there are at least 8 others to hear from. Any sign of concern about inflation and rising yields risk squeezing treasury shorts, while lack thereof may spur most selling. Traders will also be on alert for any interest on excess reserves tinkering and US payroll data that will be coming out on Friday. On that front, employers probably added about 225,000 jobs last month. This is according to Bloomberg Economics. Recent strength in data, including retail and home sales, suggests weakness in January was just one-off. Unemployment is expected to tick up from 6.3%. Final PMIs, factory orders, and the Fed Beach Book is also due. Oil watchers are also in for a busy one. OPEC Plus is expected to restore more output when it meets on Thursday. The question is whether it will be enough as the market rapidly tightens. In terms of earnings, the pace slows down considerably, but we'll be looking out for some big names including Broadcom, Dialog Semiconductors, and Marvell in the chip space. Target, Gap, and Kohl's are in for the retailers, and we're also looking out for Costco. In terms of central bank action, Reserve Bank of Australia will probably stand pat on rates tomorrow, but may make an early switch to targeting the yield on the November 2024 bond is what analysts are expecting. GDP data is also due the next day. Lastly, the China National People Congress kicks off on Friday in Beijing, with markets watching for the annual budget, economic growth goals, and targets for everything from urban job creation to inflation. Commodity investors are also eyeing tweaks to policies that are helping to support the rally in the raw material prices. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.